Today was one of those market sessions that looked simple on the surface, but underneath, there was a lot more happening. I stayed patient, watched the price action closely, and focused on one rule I never break: protect capital first, then look for opportunity. I closed the day at around $80,000 in profit. Not because I was guessing, not because I was chasing candles, and definitely not because I was trying to force a trade. I made money because I understood what the market was reacting to. Let's talk about Nvidia. Nvidia has been one of the most important stocks in the market because it sits at the center of the AI story. When investors believe AI spending is still growing, money flows into chips, data centers, and the companies that power the entire ecosystem. That is why Nvidia often becomes a market leader when sentiment around technology is strong. But a stock like Nvidia does not move on hype alone. It moves on expectations. If investors think AI demand will keep expanding, they buy. If they think the market is becoming too expensive, they take profits. If interest rates rise, liquidity gets tighter, and high-growth stocks often come under pressure first. That is what most beginners miss. They look at the chart and ask, why did it go up? Or why did it drop? But the real answer is usually deeper than one candle or one headline. You have to ask the real questions. Is liquidity strong or weak? Are investors rotating into risk or out of risk? Are yields rising? Is inflation still a concern? Is the market rewarding growth? Or is it becoming defensive? That is how professionals think, and that is why I always say the market is never random. Today, Nvidia reflected more than just company news. It reflected the mood of the entire market. When AI optimism is strong, Nvidia tends to benefit. When macro pressure rises, the same stock can pull back fast, even if the long-term story is still intact. That does not mean the company is weak. It means the market is repricing risk. And that distinction matters. A lot of people lose money because they confuse a temporary pullback with a broken trend. They panic when they should be patient. They get greedy when they should be careful. They buy too late and sell too early. That is the difference between gambling and investing. For me, the goal is not to predict every move. The goal is to read the environment better than most people. Stay disciplined, and let high probability setups do the work. That is why the profits come from process, not emotion. If you follow this channel, this is the kind of breakdown I share every day: what moved the market, why it moved, where the opportunity was, and how real investors think when everyone else is reacting emotionally. Because once you understand the logic behind the move, you stop feeling lost in the noise. And that is where the edge begins.